everyone, welcome back with me. Don't forget to like, comment, share, and subscribe this channel. Subscribe. Stocks recoup losses after Putin's nuclear threat. Fed keeps dollar buoyant. London. Global equities shook off an early knock to risk appetite and rebounded on Wednesday after Russian President Vladimir Putin accused the West of nuclear blackmail, sparking a brief flight to safe haven assets like gold and bonds. European stocks impaired earlier losses and mostly rose, helping boost U.S. stock futures as gains in energy and natural resource shares help lift the broader indices. The dollar was the big beneficiary, keeping the euro and the pound under pressure and eroding the early gains in the Japan's yen arrival safe haven. Investors were already nervy ahead of a widely anticipated rate rise by the Federal Reserve later in the day in a week that is jam-packed with major central banks' decisions on how to respond to red-hot inflation. The fact that the market has pretty much done a 180 trend shows that ultimately what the Fed does and what other central banks are set to do is more important than Putin's separate wrestling. At the moment, the number one enemy is inflation, obviously. CMC Chief Market Strategy Michael Hausen said. You are going to get ebb and flow in terms of rhetoric ramping up and ramping down, so you're going to have to deal with the underlying issue and then deal with the rest of it as when it happens. So the primary goal at the moment for central banks is to try to tame the inflation journey, and that really needs to be at the forefront of their focus. Putin said he had signed a decree on partial mobilization beginning on Wednesday, the first since World War II, saying he was defending Russian territories and that the West want to destroy Russia. If the territorial integrity of our country is threatened, we will use all available means to protect our people. This is not a bluff, Putin said in a televised address to the nation, adding Russia had lots of weapons to reply. Initially, the dollar rallied, government bond yields dropped sharply while gold and crude oil jumped. But by the early European afternoon, much of this momentum had faded. The euro was down 0.6% and off an earlier session's low, while the pound dropped 0.3% to 1.1342, holding above a new 37-year low of 1.1304. The dollar index, which measures the performance of the U.S. currency against six major peers, rose 0.6% to 110.76 during a new two-decade hike of 110.87 struck earlier. Government bonds A1 unwound most of their previous gains, pushing yields back up towards this week's multi-year hikes that have been driven by the determination of central banks to kill a potentially damaging rise in inflation. The Fed headlines a week in which more than a dozen central banks announced policy decisions, including the Bank of Japan and Bank of England on Thursday. German two-year yields, the most sensitive to rate expectation, jumped 3 basis points to a new 11-year hike of 1.752% of the day's low of 1.626%. The 10-year Treasury yield, which touched 3.604% on Tuesday for the first time since April 2011, was last down 4 basis points at 3.534%. Equities have been under pressure this week over the Fed's upcoming policy decision, at which is widely expected to lift rates by 3/4 of a point. Maybe that's all from me. Thank you for watching. Don't forget to like, comment, share, and subscribe to this channel. Subscribe, and subscribe. Bye bye.